Hello, this is Michael Bengiat, and this is the Stock Picks weekend video for August 6th, 2022. Here's our disclaimer. You can pause the video and read that. And as usual, we're going to talk a little bit about the current market environment. We're going to go through the stocks in our portfolio. We have 3. And then we're going to go through the stocks on our watch and ready list and take a look at those closer. So we're still in the stock environment indicator is still red, and we're just not seeing a lot of traction yet. We're seeing some breakouts and they're failing, or we're seeing stocks that just are ripping up on earnings. Sometimes they're selling off before earnings. It's been difficult to establish positions just because of earnings. Some of them we've been shaken out of just because we didn't want to hold into earnings without any kind of profit cushion. We lost our Eli Lilly position because of that, which continued down. So that was really no big deal. But so it's been tricky. And a lot of breakouts just aren't really going anywhere, or they're just kind of selling off towards the close. You end up with a lot of wicks. Wicks. If you're on a candlestick chart, you see it looks like a candle with a wick at the top. Sometimes the wicks are huge. So it's been just difficult trading, and not a lot of merchandise yet. So we're still, just because we're not getting that traction, and we're getting more often the stocks just aren't going anywhere too. We're just been lightly invested. So that's about it. So let's go ahead and just take a look at some stocks now. So let's see. So let's start off with our growth portfolios positions. So the first one is, let's see, we don't see, our charts are frozen there. Okay, one second, I'm gonna move it down here a little bit. Okay, so this first one is Stride, ticker's LRN. Now we have our earnings are next week early. I think they're gonna be on Tuesday. So again, we have a 2.65% gain. But you can see the stock just really hasn't done anything since it broke out. We bought it coming out of this here. It's just been kind of, made a little correction. Low volume, nothing wrong with that. It made a new high, but it's pulled back to the 21 day, and it had a nice close. But we just haven't gotten anywhere. So we're going to be watching this closely. The day I think the earnings come out in the evening or after the close. So we'll see. We may. And we can also use options if the stock trades options to determine the expected volatility, which is useful. We did that with Humana, and because the volatility was just like 2%, it was expected to make a 2% move one way or another. So we ended up holding because we had a little bit of cushion. So this one too, we have a little cushion, but if the volatility is going to be too wide and it doesn't rally into the earnings, we're going to have to probably exit it, or maybe just cut the position down, take a little bit of profit off the table. So we'll see. We just, in this environment, there's just a lot of stocks that looked really strong. I'll give you just an example. One we were watching is Funko. It was just acting really well going into earnings. In fact, you can see it broke out, made new highs, and just on earnings went down 18%. So that just would have given you a big loss. A lot of stocks like this. Another one we actually owned was doing well, and then it just on earnings crashed. It was down. Let's see, that was only down 16%, and just kept going down. It was 200 days. So yeah, we don't want to be part of these. So we just don't want to take chances in front of earnings, and it's just been too mixed. So next one we just picked up on Friday was Vertex. Now this is very strong earnings and sales, great margins. You can see in the 40s for after-tax margins, great. The sales, the earnings, $3.60 versus 17 cents, a year ago for this quarter. So a lot going on here. This one actually was interesting. It had its earnings, and it opened below the 50-day and just started rallying throughout the whole day. In fact, if we look at a 5-minute chart, you can see it gapped up, or it just jumped up, and then it kind of came back down, and then it kept going into the close. So great signs. We picked it up. I think we're in it at it's 281. So we have a decent little profit here. Nice move on decent volume. So this looks very strong. I would expect, from the close, and because we just got through earnings, this should take off. But you just never know. So we're bullish on it. We have our stop just right below the day over here, or maybe it's below this day. Let's see. Oh yeah, right below this day. So we're a pretty tight stop. We're just 3.39%. So that's totally acceptable. And we're currently up just 2.5%. So not bad. We always like to be in a positive right off the bat as soon as we buy something. A few other things about the stock. This has been a really nice winner over the years, but you can see we're starting to get the breakouts in terms of its earnings. You see here where, 8 years ago it was losing money, then it started going, under $1, then $2, $4. But look what's happened here. In 2019 we were $5, now we're at 10, then we're jumping up to 14. So you can just see this company's got a lot going on in terms of the fundamentals. It's got the best possible rating, 99 out of 99. In terms of earnings and all overall, the group is, biotech is now group 3 out of 197. Growth rate 54%. It's a large cap, $73 billion company. And basically they're developing and commercializing therapies for cystic fibrosis. So they must have some very good products or things that they're developing. So it's looking really good. So we've been watching this stock for a long time, but it's been kind of difficult to get in. It had broken out here, failed, then just kind of floated around in this buy zone. It was difficult to get this and to keep it. So we're happy to be in that one. Then finally, Humana. This is in our long-term outperformer. And you can see it just hasn't gone anywhere. We're up 1%. We've been a little down. But the good thing, though, it's been kind of, whenever it's been going down, by the end of the day, you can see these nice closes here, that the stock is getting support. And it had its earnings, nice earnings, up 26% on the earnings, 15% on sales. It's this is a very large cap. It's a $61 billion company, managed healthcare service. It just hasn't done anything. So we're just kind of floating around here. We're up 1%, but we have a pretty tight stop now of just 1.71%. So we'll see. We'll see what the I think we're right below. Let's see if I can. It's hard to get this thing to go at the right place. There we go. Our stop is at 471. That's right. I think we're right below this day. Yeah, a little bit below this day here. So we'll see. It really shouldn't go down there unless it's really not acting well or the market turns poor. Okay, let's now go to our our growth stock ready list. We only have one. We only have Humana on it because it's still in the buy zone, and then our long-term outperformer ready list is also just Humana. In fact, let me just check this. Give me 1 second. Yeah. Okay. Yeah, that's correct. So we're going to go in now and just take a look at our watch list. We do have a number of stocks here, and but we just not a lot going on. So the first one is the ticker is BMEA. It's another biotech company. We have quite a few biotechs because they're starting to outperform. So this one we're watching. You can see it's just kind of gotten recently above its 200-day, but it looks really pretty strong. It had been in a pretty strong downturn, but we like this kind of tight trading here, and we're looking to buy this right above this, let's see, we're at 12.11. Yeah, so we're basically clearing. Let's see if I can draw the line over here. Oh, sorry, I want to do it one more time. Once you draw a line in this program, you can't really move it. So let's see if I can get it better. Okay, that's close enough. So anyways, we're trying to clear all this area here. And you can see if we can get past this 12.11 to 12.25 area, we only had really just this one day where it traded above and ended up, it made a big giant move in that one day and another one there. So we're hopefully seeing it breaks out above this on strong volume. We passed earnings, didn't make any difference. This is losing money. It's a small biotech, So they usually aren't making any money. So anyways, this we consider this a bit more riskier. It's also a lower price stock. So not, yeah, this one you may pass because it just doesn't have the earnings or sales. It's really more speculative and is low priced. But it's got an RS of 99. It's outperforming, basically most stocks in the market. So we'll be watching that one. The next one is McKesson. I think we did own this and we got shaken out, I think on this day. It's been difficult to hold this, and it acted really poor going into earnings, and then the earnings it took off again. So it's still in the buy zone. It's 340 to 350, but we always like to buy it much closer to 340. Now that earnings out of the way, we'll see what it does. Maybe it'll give us another chance, or we'll just have to pass on that one. Next one is Seattle Genetics. Ticker is SGEN. Again, this is actually formed another biotech, so Industry 3 out of 197. Still losing money, but it's a larger cap, $32 billion company. It's forming a really nice cup with a handle. And we like this tight trading here. You can see how it's been kind of just much more jagged trading. And then we sort of tightened up here. We got a little shakeout. We had that one day, tried to break out, and it couldn't do it. It tightened up, and then it broke down. But it didn't go far, and it just got support at the 21-day, the green line. And it's come back up. And we'd love to see it get even tighter, like do this again, but closer to this 183 price. Now, we're actually trying to get in a little bit earlier, breaking above this. So there really only have been a few days where it's traded above that, but they have turned out to be these, we'll call them wicks. So that's what we're looking for, a little bit earlier entry. And if not, the 183 would be a secondary entry. But it looks good. Iris is pretty good, even though we're seeing a little bit of decline. Oh, sorry, this is the, no, there's the S&P. This is the S&P. Yeah, it's been actually outperforming a little bit more than this because this has gone flat. So this is why you see the RS and the number declining a little bit, just because it's going flat while the S&P has been actually rising. So again, we're past earnings, so we don't have to worry about that. Here's a next one. Amdocs. This had earnings too, and didn't really do a lot on earnings. So, sometimes they do, sometimes they don't. This is RS is also because it's kind of flattening out for the last week or so, 10 days. RS has come down a little bit, but still very strong, solid earnings. Just year after year, just a slow grower, but doing very well. It's got good ratings, good. So all in all, it looks pretty good. The only thing we don't like is the fact that earnings went negative. A little bit of and the margins came down a little bit. So maybe that's why the stock didn't really go anywhere. Nothing bad, but nothing, a little warning sign right there. But, this is what we're getting. There's just not a ton of stocks that are breaking up. And it did try to, that are breaking out. And it did try to break out, it came back in. So we're still watching this. We're trying to get in, just a little bit above this price. So we'll be watching that. We have two more. Next one is Royalty Pharma, another biotech. And this one, we're getting in right above here. That's where our buy zone is. So you can see just by holding this here, you can see there. Let me draw the line. It's a little bit easier. Let's see. Oh, I got it this time. Yeah. So you can see that it's only traded up here a few times. This was back in April, so it's kind of a little bit far back. We just got above that a little bit. And so you can see this is where, we're starting to get back up to that price, but we're not getting the selling. Before we got up to there, sellers pushed it down. It's come back up, tried again, but we're getting that same tighter trading coming up. So we'd love to see it kind of just come right back up near that line and not just blast off, but you never know. But this one looks pretty good. Earnings are, increasing year over year. It's got overall good composite rating. It's not making any money, but that's sometimes it's a company that owns pharmaceutical royalties. So sometimes their earnings are just a little erratic. They'll get a royalty payment in one quarter and then nothing comes in the next. that kind of thing. So, and let's go. The final one is AstraZeneca. So we're in the UK-based developer of branded prescription therapeutics, big company, $187 billion company. Had formed a double bottom, and then it kind of got back up, tried to break out, and now we're just kind of floating here. Had strong earnings, but it didn't, whatever reason, triple digit compared to the previous quarter a year ago. Good sales, margins are come down a little bit, but nothing bad. So, the stock didn't do anything on earnings. So, could be the guidance wasn't fantastic, or just was kind of what everyone expected. There was no surprises either way. So we're just again like we've seen with Humana, the healthcare stocks were actually acting really well, and then they've just kind of flatlined for a while. So we're really not getting anywhere. That again, that's another frustrating part of this market is that the stocks just they look like they're strong. You get a strong sector, and then it doesn't really do much. The biotechs have been there've been a few really strong breakouts, but some of them just not easy to get into. They're breaking out on earnings, or they're gapping up. We don't usually buy gaps, or they run up into their earnings and then they gap up. So it's just we don't want to buy a stock 2 days before earnings. When it breaks out, it just doesn't give you a lot of room to hold it. Now sometimes they go up 10% and you would have had the cushion, but sometimes they just don't. So yeah, it's a difficult market. That's why we're in red and we're very not invested very much because we're not getting the signs yet that we can put more money to work. So that's it for this week. Again, we'll be back as usual next Saturday, and we'll see how this does. But overall, we're going to be watching our holding stride to see what we'll be doing early in the week and before earnings. Okay, talk to you next week.